Now, as far as effective date and transition, touched on this a little bit at the very beginning. The mandatory effective date's been pushed back a year. You can early adopt, though, as of the original effective date. So I think that most people are aware that it was originally effective as of 1/1/17 for publics, and they got pushed back for non-public for publics a year. Non-publics are a year later than that even. But all entities, public and non-public, can early adopt as of the date of the initial adoption, the initial effective date of 6/06 down at the bottom for calendar year entities 1/1/17. Now, the transition methods, you can elect to apply either a full retro model where you'd adjust prior periods that you present in accordance with this guidance, and there are 4 practical expedients that we'll touch on. You don't have to employ all the practical expedients. You can adopt as many as you want, but whichever ones you do adopt, you just need to apply them consistently. The other option here is modified retrospective, where you don't adjust prior periods, but there are significantly more disclosures in the period of adoption if you utilize the modified retro method. So full retro, as I just mentioned, for full retro, you're going to retrospectively adjust all the prior periods on the date of adoption, as if you would apply the standard to all those prior periods. And then there's a cumulative effect adjustment for the adoption, the earliest period that you present. There are 4 practical expedients. As it says here, 1 or more may be elected. So you don't have to adopt all 4 of them, so that they are very quickly here. Completed contracts, you don't need to go back and restate for contracts that began and ended in the same annual period. So it's going to result in, it wouldn't have resulted in quarterly comparability issues for contracts that cross quarters, but they decided just for, expedients here that they wouldn't require that you go and, restate for those. For completed contracts that have variable consideration, you can use the transaction price at the contract completion date. You don't have to go back and account for each of the individual impacts each time the variable consideration changes. And it did change the definition of completed contracts, as we noted here, that it's one for which all or substantially all the revenue has already been recognized under legacy GAAP for 605. For all reporting periods that you present before the date of initial application, you don't need to disclose the amount of the transaction price you've allocated to performance obligations that you have not yet satisfied, or you don't have to explain when the entity, when you expect to recognize that amount as revenue. And then finally, down the bottom, for contracts that were modified before the beginning of the earliest period presented, you don't need to, there's a practical expedient where you don't have to apply the modification guidance before the earliest period presented. Instead, what you can do is you can aggregate the effect of all contract modifications that occur before that period, when you're identifying performance obligations and looking at transaction price, excuse me, and then doing your allocation to satisfied performance obligations and unsatisfied performance obligations. If you do apply any of the practical expedients, as I mentioned, you can't do it selectively. You have to apply whichever expedient you adopt to all contracts consistently. You also need to make a disclosure of which expedient you use so that users can get some understanding that the reporting isn't exactly the same as it would have been if you had applied the new standard without the practical expedient. And then, with some exceptions, you don't have to disclose the effect of the accounting change in the period of adoption, so you don't have to go through the ASC 250 disclosures. Now, with modified retro, as I mentioned a few slides back, you don't have to adjust prior periods. Instead, you're going to apply 606 on the first day of adoption and get a cumulative effect adjustment. There is one practical expedient that is available here, and it's the one that relates to the contract modification one, the aggregation that I mentioned. But you do have, as I mentioned there, if you do employ the modified retro approach, there is a significant amount of disclosures that is required in the year of adoption. And one of the big ones here is that you essentially have to keep 2 sets of books for revenue and contract costs and other line items under both the new model 606 and the old model. in the period of adoption in order to satisfy the disclosure requirements, because essentially you've got to tell people what the results would have been had you applied, a consistent model of accounting. That, we do have, that's at the end of the technical aspects, but I want to make people aware that there is a good amount out here of, thought leadership that we have on our Financial Reporting Resource Center. We've got an overall review of the original ASU 2014-09. There are white papers on all the changes, all the ASUs that have been issued since 2014-09. Brian went through in the early part of the presentation. There have been 4 new ASUs that have been issued. So again, that's a resource out there that anyone who is interested can go and download the white papers. And that is all for our technical aspects, our review today. And thank you for joining us. And that concludes the webcast. Thank you.